What's up guys, how's it going? Today I'm going to talk about trading signals that are offering you multiple take profit levels or that are asking you to take partial profits.
Your first take profit has to be 161.
I had no target in mind. I wasn't targeting any previous zones.
My first take profit is obviously 162.
So we could call this take profit 1.
Then you can target the next structural.
We could call this take profit 2.
Second take profit area would have been down here, but you know what guys, it is kind of what it is at that point in time.
I'll explain to you why they are doing this, and also I'll tell you why I think that in most situations you should not be doing this. We'll go over a few examples and we'll do the maths. And you'll see that it's not really an opinion, it's actually mathematics. In most cases, it doesn't really make sense to take partial profits. So there's multiple ways for a signal provider to ask you to take partial profits. They can offer you multiple take profit levels and they don't really tell you what to do with them. This is pretty much what Lambo Raoul is doing. Some other providers will ask you to close a specific portion of your trade for every level. This is what Mad Charts is doing. Others will send their trades with only one single take profit level. The target might be a little far, and as the price moves towards their target, well, they will ask you to take partials, close partial profits. This would be the style of Nina from My FX Journey or Maxim. He's at Forex on Instagram. The main question here is, why are they asking you to take partial profits if I think you shouldn't be doing this? Well, there's nothing malicious about the main reason. It's simply because it feels very good to secure some profits. It's kind of nerve-wracking to hold your trade all the way until you take profit without bringing any money in the bank, because it really feels bad whenever your trade is so close to the take profit and then the price turns around and goes all the way back to your break-even level, or worse, your stop loss. Whenever this happens, it feels awful, but I'm gonna say that it's simply part of trading. You cannot avoid this, it will always happen. Just remember that numbers don't have any emotions and the market doesn't have any either. So maybe the signal provider will feel better by taking some partial profits, and he really wants his followers to feel good about his trading signals as well. The other reasons why a signal provider might do this would be because of some marketing tricks. So first, as soon as some profits get secured, well, they can claim and they can advertise a winning trade. You'll see them screenshot this trade and put them on their story, or maybe on their free Telegram channel. They will advertise that, hey, we just made some profit on a good trade. Second thing would be for the providers that are still counting pips. Now, there's less and less providers doing this because counting pips doesn't mean anything really. But as soon as the first partial gets taken, well, they can add pips to their pip counts, and at the end of the week they will advertise, we managed to make 2,000 pips this week or something like that. And the third thing would be because in these recent years, with the rise of strategies like smart money concept, it's very trendy to use a high risk reward. But from the standpoint of a signal provider, using a very high risk reward, it means that you won't hit that take profit as often. So if you're asking your follower to take some partial profits early, you can still advertise some good results, and you can also advertise that you're using a high risk reward. And that's what's trendy these days. This is what sells. So there might be a couple other reasons or situations where I think it could make sense to take like one partial profit. I'll talk about this a little later. For now, let's jump on the computer. In practice on your trading software, there's actually two ways to take partial profits. You can have a single position with the lot size reflecting the kind of risk you want to use. I put one lot in that example, but it doesn't really matter. As the price moves towards your take profit, well, you can manually close portion of that trade, or you can use an expert advisor that will close portion of that trade for you. Another way to do this would be to break that trade into smaller positions. So in that example, I opened 4 times 0.25 lots. I'm still having total 1 lot open there, but I placed manually different take profit for each position. And whichever way you decide to do this, the outcome will be exactly the same. So we'll go over two examples. The first one will be a 1-to-1 risk-reward ratio, and right after that, I'll do an example with a higher risk-reward. In both cases, I'll show you the kind of results we should expect if we are not taking any partial profits compared to if we are taking partial profits. So here's our first example. These trades are placed randomly on the chart. Let's zoom in on the top one. This is the trade that doesn't have any partial profits. So as I said, it's a 1-to-1 risk-reward ratio. So what I mean by that is that the take profit is just as far from the entry compared to the stop loss. The stop loss is 40 pips away in this example. Same thing for the take profit. So in that case, what I call the baseline win rate. The win rate that if we don't account for any analysis or strategy, you should get about 50% win rate. You should hit just as often the take profit as you should hit the stop loss because they are equally spaced. Now, when you introduce your strategy and your analysis and you find a good entry, then this is where your win rate might get a little higher because you should, in theory, hit that take profit a little more often compared to the stop loss. So in that specific example, if we do hit that take profit target, we'll be gaining $400. If we hit the stop loss, well, we'll be losing $400. Okay, so this one's pretty simple. Let's go down here to get the same example but with partial closing. So what I did is I broke down the one lot trade into 4 smaller positions of 0.25 lots each. I placed different take profit target for each position. They all have the same stop loss, and we're still 40 pips away from the entry with the stop loss. We're still 40 pips away with the 4th take profit level to the entry. Let's have a look at the best case scenario we can have with this trade. So the scenario where we would hit all 4 TP levels. So if we add them up, the first take profit is yielding $25. The second one is yielding $50. The third one would be $75. And the fourth one would be $100. So if we put all of these together, the maximum profit we can get out of this trade is $250. But the other way around, if we are hitting the stop loss, we'll be hitting the stop loss with all 4 positions. They'll be losing $100 each, so we are still losing $400. The thing is that 4th take profit level is still just as far as it was before. We're still 40 pips away from the entry, so you can still expect to have a baseline win rate of about 50%. But since we're diluting the profit as the price moves our way, well, it doesn't bring as much profit as before. We're only gaining a maximum of $250 on that trade, but we're still losing $400 anytime we hit the stop loss. So this means we need to have a much better strategy if we want to get some profit out of a setup like this. Now we'll make another example with a higher risk reward, but before that, I just want to go on a little tangent. I said a little earlier that high risk reward strategies, it's just something that is kind of trendy these days, and people talk a lot about risk reward in general because it's something that they have control over. You can choose the kind of risk reward you use, right? But the win rate, there's not a lot of people who talk about it because this just depends on how good we are as a trader, how good the strategy is. Using a high risk reward ratio, it usually means that you'll have a lower win rate. And it's a very simple thing, simply because if we put the take profit much further away from the entry price, well, the odds are that we won't hit that take profit level as often. This is why I'm referring as what I call the baseline win rate. If you have a 1-to-1 risk reward, well, your baseline win rate should be about 50-50. But let's have an example where the trade has a 1-to-4 risk reward ratio. Well, we can expect the baseline win rate to be very different. We should hit the stop loss about 4 times before hitting the take profit once. The key to profitability in trading is to find a risk reward that fits with your strategy, that fits with your analysis, that you find yourself having a good win rate when you're using this RR. A win rate that will cover your losses when you will hit the stop loss, because you will hit the stop loss. But that will be the subject for a whole other video, so make sure you click that little subscribe button and ring the notification bell just to make sure that you don't miss out when I come out with this next video. But now let's go back to our example, and in this case we'll use a 1-to-4 risk-reward ratio. So this is actually exactly the same example, but I moved the stop loss a little closer. The stop loss is now 10 pips away from the entry price. The stop loss is much closer to the entry price. I'll say it again. Now the odds are that you'll be hitting that stop loss 4 times before that you hit that take profit. In that case, we are still making $400 whenever we hit that take profit, if there's no partials involved. But whenever we hit the stop loss, in that case, we're losing only $100. But if you hit it 4 times, it doesn't change anything. Now we're back to the example where I'm closing some partial profits. So still the same thing, 4 positions of 0.25 lots each. I moved the stop loss much closer. It's now 10 pips away. So every position will be losing $25. We have 4 positions. We're still losing $100 if we're hitting this stop loss. And on the profit side of things, it's still the same thing. So in the best case scenario, we'd be winning $250. But now, since the stop loss is much closer, well, the odds are that we'll be hitting that stop loss much more often, probably 4 times more often, because it's 4 times closer. So the odds are that we are still losing $400 before hitting that full take profit. So what you should understand here is that it's just the proportions that are changing, but it's still exactly the same. By taking these partial profits, we are diluting the position, we are making the real risk reward much worse, and we need a much bigger win rate to get profitability. So it's basically the worst of both worlds. There might still be a few scenarios where closing 1 partial profit could make sense. Some people call this leaving a runner, and that would be when you close like 90% of your position at a specific level, maybe at a scalping level or intraday level, and the last 10% of the position, you hold on to it for maybe many days. You want to turn this into a swing trade. And the other way around would be quite interesting. Since it hurts so bad to close partial profits, I think you should maybe try closing partial losses. So as the trade goes into drawdown, you can close some portion of your trade. Raja Banks, as an example, is a big advocate for that. As soon as he gets into drawdown, he will close 50% of the position. For sure, a lot of signal providers are doing this, and the question would be, well, are all of these signal providers completely worthless? Well, it raises suspicions, that's for sure, but I have been capable of making some profits with some of these signal providers by simply ignoring all of the TP levels and finding myself the one good spot where I want to take profit. A good example would be when I followed Lambo Raoul's signal last summer, and I went deep into his history, and I figured that the TP number 3 was the furthest take profit level that still had a good win rate, that he was hitting very often. Past that, the TP number 4 didn't have a good win rate, so I simply ignored all of the other take profit levels and I took all of my profit. I closed 100% of my position on that TP number 3. This lasted for a few months and it was pretty good, but after that the win rate on that TP3 was not as good, and I couldn't find a specific level that had a better win rate than the others, and I don't want to take any partial profits, so I stopped following the signal. So hopefully you were able to make up your mind about partial profits, and if you learned something today, please click that like button. If you want to support what I do, well, I don't sell any courses because you can learn pretty much everything for free on babypips.com. You can also check on Investopedia for any words or any concept about trading that you don't know about. If you want to learn about fundamentals, I recommend you to read religiously forexlife.com. It's also another free website. But really, if you want to support me, I just started a new Instagram account, and I also have some affiliate links in the description box below. Thank you for watching, and I'll see you in the next video.